Have you noticed that mortgage rates just hit a 3-year low, yet home sales dropped to a 16-month low at the same time? That sounds confusing, right? Well, if rates are improving, why are sales slowing? Well, today we're going to answer that question by unpacking exactly what's happening in the housing market this week and what it means for you as a buyer, seller, or investor. Now, before we do that, though, I just want to thank you for tuning in today. This video is part of an ongoing weekly series where I break down the latest housing news and explain what it really means in the real world. So if you want to stay up to date each week and get access to my other videos with tips for buyers and sellers, local lifestyle content, and real estate insights, well, make sure you subscribe to the channel. That said, let's shift lanes and dive in. Now, the biggest headline this week is mortgage rates. The average 30-year fixed mortgage dropped to 6.09% recently, and the 15-year fix is around 5.44%. Now, that may not sound dramatic at first, but 1 year ago, rates were pushing close to 7%. Now, on a $400,000 home with 10% down, the difference translates to roughly $200 per month in savings compared to last year. This, friends, is really meaningful. Lower rates improve affordability and increase buyer power. And we've seen mortgage rates stay in a very tight range, just above 6% for 7 weeks straight. This kind of stability matters. When rates bounce around, buyers, they tend to hesitate. When rates stabilize, buyers start making decisions again. And stability is one of the reasons why experts feel cautiously optimistic about a coming spring market. But here's where the story really gets interesting. Even though rates are improving, home prices are still sitting at record highs. The median existing home price in January reached $396,800 nationwide. Now, that tension between improving rates and higher prices explain why buyers are changing their strategy instead of simply jumping back into the market. Here's a great example. More buyers are now exploring alternative loan options. Adjustable rate mortgages are getting more attention, especially for higher price homes. These loans start with lower interest rates. In fact, recently, ARM rates were about a full percent point lower than fixed rates. Now, as a result, the share of ARM applications recently rose to 8%, which is the highest level in several weeks. Now, we're also seeing more seller paid rate buydowns. Now, this is when a seller to help reduce a buyer's interest rate for the first few years of the loan. This is helpful for buyers because it lowers their monthly payment during the most expensive early years of home ownership. Now, FHA loans are also gaining popularity. Now, these loans allow down payments as low as 3.5% and often carry slightly lower rates than conventional loans. This tells us something important about the market. Buyers are not sitting on the sidelines waiting for perfect conditions. They're adapting. Finance strategy is becoming part of the negotiating process. That shift is reshaping how some real estate deals are getting done. But this isn't just noteworthy story in the real estate this week. Existing home sales dropped to a 16-month low in January. Now, at first glance, well, that sounds negative, but context does matter here. Severe weather played a role with this, and housing data always lags behind real-time market conditions. Now, at the same time, broader economy delivered some encouraging signals. Inflation dropped to 2.4%, and core inflation is now at its lowest level since 2021. Now, the job market also showed strength with 130,000 jobs added and wages growing 3.7% year over year. These trends suggest the Federal Reserve will likely hold rates steady in the near term. Stability in the broader economy helps the housing market recover gradually. So while sales numbers look weak today, the underlying fundamentals are moving, well, in the right direction. Inventory and pricing trends add another layer to this story. New listings improved slightly, but they are still behind last year's pace. Sellers have been slow to enter the market, which continues to limit inventory growth. Meanwhile, asking prices are softening in some areas. Nearly 1 in 5 homes have price cuts recently, and builders are competing more aggressively on price to keep sales moving. Even luxury market started the year on a softer footing, with prices trending slightly lower. Now, this is important. Builders are playing a growing role in improving affordability. For buyers, well, new construction may offer more negotiating power than resale homes right now. For sellers, Pricing strategy has never been more important. The days of simply listening and waiting are largely gone. One more trend worth watching is where demand is the strongest. Now, the hottest markets right now are in the Midwest. Kenosha, Wisconsin ranked as the hottest housing market. Kansas City saw one of the biggest jumps in demand among large markets. Affordability continues to drive migration patterns. Buyers are chasing value and lower cost of living, and that is reshaping competition across the country. So how do all these pieces really fit together at the end of the day? Well, we have falling mortgage rates, record home prices, slower sales, rising use of creative financing, more builder competition, and shifting regional demand. These trends may seem disconnected, but they all point to the same bigger story. The housing market is transitioning. For buyers, this is becoming a market of strategy and opportunity. You have more financing option, more builder incentives, and gradually improving affordability. Now, for sellers, well, the market still offers strong prices, but success now depends heavily on pricing, presentation, and negotiating strategy. For investors, well, stable rates and softening prices in some segments may, create opportunity that simply did not exist a year ago. Now, I've said this before, the housing market is not booming, it's not crashing, it's recalibrating. And markets that recalibrate often create the best opportunities for people who stay informed and act strategically. In other words, hold on tight and see where this roller coaster market heads next. All right, friends, well, that's going to do it for today. As always, thanks for tuning in to this week's market update. If you found this helpful and want to keep getting weekly updates along with tips for buyers and sellers and other real estate insights, make sure you subscribe to the channel down below. And if you happen to be in California looking to buy or sell or have general questions in the real estate market, I'm a real estate agent right here in Orange County. Feel free to reach out to me. All my contact information is down below the video. With that said, friends, that's all I got here. I'm going to be shutting off the cameras, and I will see you in the next video.